Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is Richard Morco, and we have with us on the Long Hill Report conversations with, as usual for this month, Mike Carnevale to tell us what's happening in the world of finance. So, Mike is doing a victory dance because we're above 3,400 in the Dow, 34,000 in the Dow.
Yep.
And things are looking good, huh?
Well, you know, we finished April, and historically April's the best month of the year. It didn't disappoint this year. The Dow was up 2.5%, and as you had mentioned, it closed back over 34,000.
Of course, in the last few days,
Well,
we're talking about April.
we don't know what's going on in May. We're only interested in April.
Well, some poet said April is the cruelest month, but not for Mr. Happy over here.
Not for the stock market.
Okay.
It's since 1950, it is the best month of the year.
Sell in May, go away.
Yep.
So, ladies and gentlemen, he's not suggesting you go call your broker and sell everything,
No.
and then go to the beach until Halloween.
Correct.
All right, serious. You have to be serious, people.
Can't take everything literally.
Figuratively.
Right.
Speaking of figuratively, do we have any banks left?
I think there's two still left. I know there's one that's left, which is J.P. Morgan. The rest, who knows?
That was the vampire
Yes,
bank
yes.
that's just been eating up everything.
Right.
Do you know, I don't know if this is going to hit you, we've only had 3 banks go.
Yep.
We're talking about another one.
Right.
But 3 banks go, but the bloodbath in money has passed 2008. Did you know that?
I did not know that.
I read that somewhere, and I'm not going to stand behind it. But
Didn't know that.
They did say, yeah, there were a lot more banks that went under then.
Mm-hmm.
And of course, inflation has continued since 2008, such that that adds to the price of what's going wrong.
Mm-hmm.
But are there a number of more banks that will go, regional banks?
Oh, I'm sure there are.
So how bad will this get?
Things usually don't improve till somebody does something. So until, whether it's the FDIC or the Fed, decide to do something.
FDIC is doing it. They're giving away the store.
Yeah, but until they make some
Pronouncement?
different regulations
Policy or
that
something?
tighten this type of activity up, it'll continue until they do that, and then it'll quiet down, and then we can worry about, the next thing.
So when we meet in June,
Mm-hmm.
you will say, "Of course, I told you everything goes to hell in May." Anyway,
Well,
I
there's a Wall Street saying that says
Yeah?
you sell on May 1st, you don't
okay.
come back to hell. And the vast majority of gains in the stock market happen between November and May. So that doesn't mean sell everything, as you had said. It just means if things aren't great in the next 6 months, no surprise.
I didn't say sell in May. I'm reading it right here.
Yes, but then you said don't sell, and that's true. You don't want to.
When did I say don't sell?
You said, "Oh, don't sell we're
I
taking
would sell
this-
everything,
Correct.
figuratively.
Right.
But I didn't specifically say don't sell.
So you're covering it both. I'll have to
I'm trying to be more like you every month.
play the tape back. No, but I mean,
Call the commissioner. We're going to get a ruling on
yeah,
this.
want it by 1/10 of a second. But no, it just means, historically the next 6 months usually aren't great. So if they're not great, you don't get too excited because that's what history says.
Okay. All right. You win.
Okay.
We'll talk about this next month. All right. We're going to talk technicals now. The
Yeah.
200-day New York Stock Exchange moving average, now 52% versus 54 a month ago.
Mm-hmm.
So that means people are shorting less,
Yeah, I mean, it's, two percentage points.
other than toxic banks.
Right. Not much change in that indicator. There was indicating changes in the other technical that will show that things are weakening a bit, which after a big rally that we've had, you'd expect, right?
Okay, the volatility index,
That's very low. That's not a good sign.
not a good sign. But it's May anyway, so.
That's true.
All right. And it measures the expectations for the S&P 500, the index options.
Right.
The volatility over the next 30 days is not good, you're saying?
Correct. Yeah. There's less volatility. Usually you want more volatility because when things are more volatile, people get a little more worried and they tend to sell, and that tends to happen after prices have gone down. Nobody sells as it's going up.
Okay. The stochastic oscillator.
Yep.
How is that oscillating?
That's really pointing toward what they call potentially overbought, meaning that prices have really moved up a lot in a short period of time. A month ago, that indicator goes from 0 to 100. 100's the worst. A month ago, it was 35. Today, it's 86.
Which isn't good.
Which is not good.
So we're expecting.
If the market drops, this is kind of forecasting that.
Well, that's a big move, 35 to 86.
It is. Yeah.
So, okay. The fear and greed index.
Yep.
7 different indicators that measure some aspect of stock market behavior. Market momentum, stock price strength, stock price breadth, put and call options, junk bond demand, market volatility, and safe haven demand, from extreme fear to extreme greed. And you are saying it's not good.
Right, we're in the greed area now, and that was up from the neutral, but almost the fear area a month ago. So, 3 of the 4 indicators would say, if you didn't know where the Dow was, and you just looked at the technical indicators, you'd say, the stock market could go down in the short term, based on where the indicators were and where they are right now. Of the 4, I think the stochastic oscillator is the one to really focus on, because that's deteriorated a lot in the last month, and that would tell you that Dow was at 34,000, may not stay there.
Well, it's already sort of gone down from there.
It has.
So, okay. So you've already made your point.
Okay.
But if it gets really worse, we'll jump out of the windows. We can only get a broken leg from out here.
We probably just injure ourselves. We have to go up to the roof. And I would take a running start, and that might maybe have a car parked close so that we hit a car before we hit the ground, just to be sure that.
I knew Charlton needed to build a skyscraper.
Yeah.
And they never did. So people
Got to change the zoning.
Yeah, well, it is kind of, well, yeah. So we'll go to the next zoning meeting and talk about the
the need for
the need for,
something like that.
and watch them try to have us committed.
Yes.
All right, market news. IMF, International Monetary Fund.
Yep.
Weakest global forecast in 30 years.
Mm-hmm.
Yeah, I can, just as a civilian, not an insider like you, I could say things don't feel good.
Yep. The interesting thing, though, about that is they still don't think the U.S. is going to be in a recession, that there'll be still some positive growth. It may be next to nothing, but it won't be, a negative number.
Well, the word I've heard a few different places is stagflation.
Yeah.
We have inflation,
Mm-hmm.
but not, the activity is slacking off a bit.
Right.
If you don't want to officially call that a recession, I'm willing to go with the term stagflation. It ain't a positive.
Right. But even that may not happen because the rate of increase in prices is slowing down.
The rate of increase.
The rate of increasing, right.
But the increase has not stopped.
No.
So,
Right.
yeah.
So it'll be interesting to see what happens with that. And then, of course, they use the positive is that China supposedly the economy is reopening, getting better, and then the negative, of course, is what's happening in between Russia and Ukraine. But they've been saying those two things for months.
Well, I'm just waiting for the ruble to go to rubble, as somebody in the American government said.
Mm-hmm.
All right, the last Fed meeting. Well, what did the last Fed meeting say?
Well, they said that they think if it is a recession, it'll be a mild one. But
Is that
what
like
else
a
would they
prediction
say?
of transitory inflation?
Yes. Well, yeah.
Should I take that?
I would take that in the same
vein.
vein. Yes.
Okay, just want to clarify that.
Yeah. I mean, you got to take everything, all these things, and who's saying it and
Why
they're saying it,
yeah.
right? The interesting thing about it was, so those are some of the negatives, but the positive was CNBC had their economic survey, and they interviewed, I don't know, thousands of people, and supposedly scientific, whatever, but people are the most negative about the economy they've ever been in the 17-year history of that survey. So that's a positive.
I understand that. Generally speaking, people say, or authorities will opine that the average man on the street doesn't get it right.
Mm-hmm.
So I understand that, and I can see it. And I think it was Peter Lynch that said, about taking things with a grain of salt. Sometimes it's darkest just before it goes pitch black.
That's true.
So it is possible that Joe Average could get it right sometime.
It's
and we're
possible.
in a big problem.
Then we're in a big problem. Right. Not likely, though.
Yeah. Okay. 63, that 63% should not be worried about their job.
No, they probably should.
Well, then Mr. Joe is doing something smart.
But, they may be worried about it, but there may be no reason to worry about it.
Well, you just said they should.
Yeah, I would say that, I'm not worried about my job. Probably means tomorrow I'm all done, but. Of course, as I...
We'll be telling the New York State Police to search upstate, upstate New York.
Western.
For a guy with glasses.
Yeah. Balding, overweight, blind guy.
Oxford, nice Oxford blue shirt.
Right.
Yeah, you'll know it's him.
And try to find him quick because he still has a belt. And that could be used for...
I didn't hear this, ladies and gentlemen. I don't know why he's saying this stuff.
But no, I just think, whenever you see extremes like we see in this survey, usually doesn't. It's usually wrong.
Generally speaking, I'd say,
And that's all we're doing really, with really any of this stuff, right? It's just the odds.
right. Okay, I can see that. And anyway, 81% of cutting spend, that's always a good idea to
Yep.
cut spending.
Yep.
The 25% who think it's a good time to invest,
Right.
that's the lowest in the survey history, and
That
it
is.
argues for take a flyer.
Yep.
All right, interest rates. Canada had no change for the second straight meeting, which is kind of odd for me because Canada has that sport, curling, and in the curling championships, the Edmonton Whiskers beat the Ottawa Snoozers.
Okay.
And when the Edmonton Whiskers win, it's
Yeah.
usually a sign that they should change, and
Yeah,
big time.
Oh, really? Oh, so that didn't work out.
No, I made that up.
Oh, okay.
All right.
Well, you said it with a straight face. I said, is that true or not? Because if anybody would follow curling in this room, I would probably say it would be you.
And why would you say?
Just, you know,
Look, why would you go out on a limb?
just from observations.
And what is the observation?
No.
Okay, what's the other observation?
ju-
Keep going out on that limb yourself.
Just the observations that I see in my four eyes.
Well, yes.
You know?
But, usually somebody could, I think you went out on a limb here, and you can't even get back. And do you think I'm going to let you get back?
No.
I'm handing you the saw.
Yes, I know. Now, my goal now is just to stall till the end of time here.
All right, so enough of that falderall.
Yes.
All right, Canada, no change for the second
Right.
meeting. Japan, no change.
Yeah.
And the Japanese Curling League, nobody knows how big that's gotten in the last several years.
Yeah.
The only central bank that still has a negative interest rate,
Yep.
so Japan still has that?
Negative 0.1%.
So it's a bail-in.
Yep.
So,
Yeah.
man,
Yes.
I'm not putting my money in Sumitomo.
Well, there were 4 or 5
no,
countries at the
no
peak.
more,
and now
yeah.
there are none, except Japan.
Oil rig count is up.
Yep.
Price of oil has been down recently.
Mm-hmm.
If it is because they're putting out all those rigs, it's pushing it down,
Well,
or is the economy going such that people are driving less or using less?
I think it's the economy that's doing it because I didn't put it in here in the notes, but
That's what
if
I'm
you look
asking
at, if you look at average daily oil production, it's still about 12.3 million barrels. So it's not that they're pumping more oil, which is bringing the price down. I think it's probably what you had said, the economy, it's like people are concerned, so less usage.
So let's go back to the guy in the street. He knew what he was talking about.
In the short run, he may.
All right, the economy, inflation. I know you're going to say the rate of inflation.
Correct.
Usually I have to get you to say the rate.
Yeah. The rate of
Because
inflation
you'll
is
say
falling.
to me, inflation is going down.
Yeah.
Happy days are here.
No, the rate of increase is slowing,
The rate of increase is slowing.
and that's good.
It's less worse.
Right.
Okay. We're hard school here.
Yeah. It's not bad.
We're tough guys.
I would say it's good. So, I mean, that's a positive. Then you have the leading economic indicators. Those have been negative for almost a year, and they actually got worse in the latest report, which came out in March. So, it's worst streak since the financial crisis, in 08 and 09.
Oh, wait.
Yeah. So,
I
that's...
usually ask which finance. We've had several
Yes.
in my
Oh, yeah.
lifetime,
Yeah.
but 08 is what people are now referring to mostly
As the... Yeah.
as the standard.
Yeah.
The,
Yeah.
okay, so
So that's not going in the right direction, and hasn't been for almost a year. But it hasn't led to really high jobless losses, nor has it prevented a lot of jobs from being created. So you got to sometimes wonder about that indicator. As I said many times, there may be something wrong with that indicator in forecasting the current, economic situation. But that's for years to come. We won't figure that. They won't figure that one out. But I wouldn't put much emphasis on that one. Is maybe people put in the past, because it doesn't seem to be working.
Okay, nobody was attacking you over there.
No, I know.
I'm feeling bad here.
I was fearing something was coming, so I said, well, let me try to get out of this the best I can. If I keep talking, I'll say something that he likes, so that will we'll back off a bit there.
I really don't. I have treated you with nothing but kindness, and in the words of King Lear, sharper than a serpent's tongue, an ungrateful child. All right, jobless claims.
Well,
which were just kind of mentioned there.
Yeah.
230,000 as opposed to 207
Correct.
a year ago.
They've gone up, but the big thing with that one is in previous recessions, they were accompanied by like 250,000 or more layoffs a week. So we're still not at that level, even though leading economic indicators have been negative for a year.
You just said you didn't want to talk about the leading indicator.
Correct. And so that's why that indicator, economic indicators, is probably something going on there.
Okay.
I
I was
don't
going to let
understand.
you get away with not talking about it, but all right, if you want
I
to talk
figured I'd
about it, we can talk about
Bring
it.
it back up one more time just to make sure.
All right, unemployed. 1.9 million was 1.5 million a year ago.
Yeah.
Put the spin on that it's just quite wonderful.
No, that isn't right. More people, can't find work, and are collecting benefits. The true unemployment population is much higher than that, because they only count people who are receiving benefits as unemployed. If you're not receiving benefits, you're not considered unemployed, because you're not considered to be in the labor market.
Oh, yeah, so if you lost your job and forgot where the unemployment office was, then you're not counted.
You're not counted.
Right. That seems cute to me.
Yeah.
I've known about that for a long time, and when I hear it, it sounds kind of cute. It sounds like, is this guy? Are they gone? Are they employed? Are they? Why? What is the rationale for not including people who just don't have a job, not collecting?
Because they're not actively looking for one.
Yeah, I understand that, but they're still unemployed. They're not in employment. You put the UN before the employment. That's what I do, but then I'm not the sharpest tack on the wall. I never claimed to be.
Well, I'll let that pass and go on with.
I knew you were going to let it pass.
Yeah.
I mean, that's not what a gentleman would do.
No, well,
You would have said something like, no, I'll kill the man who says it.
yeah,
But no, you let it pass.
I let it pass.
So, come on, I'll let you tell me, make the rationale for this thing.
Well-
I'm not letting that pass.
Well, supposedly, if you're employed, right? I think that means you're.
Are you going to start talking like Kamala Harris?
Yes. Yeah. If you're working, if you're unemployed, you're a worker who isn't working. But if you're not a worker, then they can't count it
My
as,
brain is going to explode if
As
you keep talking.
as unemployed. Because I think the age bracket there is.
And now we're bringing it age.
Well, I think the age bracket there is like 18 to 65-year-olds. So somebody who's 19 years old and in college can't be considered unemployed because they're not actively looking for employment.
I get that. I understand that.
Yeah.
But somebody who has been in the job market and just can't get a job and his benefits have run out, I think that's ridiculous to stop counting him.
Well, they count that as
Not looking.
not in the labor
Not
market.
in the labor. Yes,
Right.
we said that.
Yeah.
I disagree. And I think logically just because they can't find a job and they're not receiving benefit does not mean they're unemployed. Now, somebody who has gone into bad substance abuse and is living in a tent, we should all be sorry for that type of person. But we can rationally make the argument they're not in the labor force.
Right.
But somebody who's a month or two after their benefits have run out, I can't see that at all.
Yeah. I hear what you're saying.
You don't care. I know that.
I hear what you're saying. But that's just the way the government counts.
Okay, what am I saying?
Well, you said if somebody's, benefits have run out for
I just
2
want to know
months.
if you
I may not look like I may not look like the smartest person, but
Wait a minute. Now, see, I am going to take that. I'm going after anybody who says that about you, including you.
well, I would say, yeah, I understand what you're saying, is but that's how the government tracks people. So
Yep, and
call your local representative to me and voice it.
yeah, like the government, like my rep is going to do anything
Right.
about that one. Okay, so as you said, the payroll farms are up
Yep.
by 236.
Yep. And the number there you want to focus on, at least if you want to see the economy growing, it's got to be at least 150,000 new non-farm jobs. And we've been above that for a long time. So, in the labor force grew, meaning there were 480,000 in the month of March anyways, there were 480,000 people who weren't looking for work, who began the
Where'd they
process to
come
look
from?
for work.
Where'd we
Where
do we find that?
They were the people who were out of the labor market. They were the
They threw away the crack pie.
yes.
Got a haircut, washed up, and went to work.
They were the
for Price Waterhouse.
They were the individuals whose benefits ended 2 months ago, and the government said, "Oh no, you're not considered unemployed anymore." They said, "Well, wait a minute. I think I'm going to start looking," and now they come back in as part of the labor force.
I'm so glad you get scientific with this. It's just
We try,
all right, and so wages are up,
Yep.
but
At a
How
smaller
am I-
pace.
as inflation is up at a small pace, but wages get eaten up by inflation.
Right. Now, the interesting thing there, there's some positive there. Over the past 12 months, wages are up 4.2%. Of course, inflation is probably around 5%, so it's not keeping pace. But the pace of wage growth is decelerating. That's good for bringing down the rate of inflation. Because history shows, if you look at those two numbers, that inflation really begins at the wage level. Because as people make more money, they tend to be less price sensitive. And that allows businesses who are paying out higher wages to raise prices.
Now, this is where we disagree, it's sort of.
Okay?
Supply and demand has a lot to do with that. I mean, if the supply of labor is up and they're being paid more, yeah, they'll bid up assets. But with a stable currency, that's just supply and demand. But
Yep.
with a government or a central bank that pumps money into the economy, it's the currency itself
Right, that's
going on.
part of the reason.
That's the inflation. The other stuff is supply and demand.
Mm-hmm.
Now, granted, Adam Smith might disagree with me, or somebody else might disagree with me, but that's my story, and I'm sticking to
Yeah.
it.
Well, I think with all of this stuff it's not one particular thing, right? It's a combination of a lot of different things, and then you throw in the Red Sox into the mix, and that kind of gives you the answer.
Oh, look,
You know.
the world is still good as long as that sign in Kenmore Square
Yes,
is going off.
It's still
and on.
going up. Yep. We thank the Venezuelans.
Thank the veteran. Yes, yes. Ladies and gentlemen, you have been fortunate to have been with.
You've reached the end.
Yeah, that might be a good sign. You with Gus, Mike Carnevale. I get everybody's name mixed up. Conversations with Long Hill Report, and please tune in next month, where we will solve everything again.